All right, well, welcome everybody to this week's stock market review. My name is Bennett McDowell with TradersCoach.com. Great to have you all here. All right, before I get going, Gene, any comments you want to add in for this morning?
Nothing other than welcome everyone, and just to test out the chat feature, since we love when you ask questions and participate, if you could all just type in the chat box where it says enter your message. It's probably on the lower right-hand side of your screen. You may need to activate it by clicking the little chat box on the upper right. Oh, good to see you, Alexander. Hi, Marone. So welcome, and Ben, back to you.
All right, well, great to have everybody here. Happy holidays to everybody, and hope everybody's doing well out there. All right, so markets have been pretty darn powerful, haven't they? They are really approaching the all-time high. It's going to be interesting to see if they can take it out or not. We're going to take a look at the charts and keep an eye on it. Before we get going, just a few administrational items, of course, just in order to talk about the risks and so forth involved in trading. Like I always say, without that risk, there is no opportunity. So the two really do go hand in hand. But you need to be aware of the risks involved in trading. And there's a couple different ways you can protect yourself because there's different kinds of risks in the market. We have market risk. And of course, those are unforeseen events that it's pretty hard to protect yourself against those. And the best way to do that, of course, is through funding your account with money you can afford to risk. So risk capital is one way. The next way is controlling your trade risk. And this is where we as traders can have something to do with that. It's a combination of putting your stops at the right place, calculating your trade size, also known in the industry as your position size. And we have, of course, software that can help you do that. And we have materials with calculations on how to calculate your trade size, which takes into many different variables like the account balance, the amount you actually want to risk based on the risk of ruin tables and so forth. So if you want to learn more about that, I'm going to show you some books in a minute that can help you with that. And then, of course, be sure, we're going to look at stocks today as well. So be sure that you check with your financial advisor or accountant or whoever manages your money to be sure what we talk about here today is suitable for you. We don't know your personal situation. They do. At least I hope they do. And they will have an idea of what's good for you and what's not. So definitely get a hold of them before actually taking a trade with real money. And then finally, past performance doesn't guarantee future performance. We deal in a realm of probabilities when we trade the markets. And sometimes we're just wrong, okay? And that's being on the wrong side of the probability matrix. But when you have an edge, you want to be winning, obviously, more than you're not. And therefore, again, good risk control keeps those losses small while the winners can run. All right, so just kind of good stuff to know. Here's a couple books which you probably are all pretty familiar with now. I think many people here, I'm looking at the list, are current clients. But if you need help with money management, let me direct you to the two books called The Trader's Money Management System and Money Management for Traders. Both are excellent books. The newer book, which is a money management for traders, it's much more concise than the other book. So one's very comprehensive, whereas the other gives you exactly what you need to know in order to start implementing good risk control into your trading program. Of course, I got the Survival Guide for Traders, Elliott Wave Techniques Simplified, and we're coming out with the new Art of Trading book, second edition. So those are all coming up. All right, let me just amplify this a little bit here. All right, so we're going to start out with Wednesday. We have ADP today, U.S. productivity and trade deficit announcements coming out today. No FOMC. Thursday, tomorrow, we have initial jobless claims, wholesale inventories, consumer credit. Friday, we end the week, consumer sentiment, U.S. employment report, U.S. unemployment rate, and the U.S. hourly wages and hourly wages year over year. So I don't see anything really going to be throwing the market off there. The initial jobless claims, I think, are kind of in check at this point. And so I think things are going to look actually okay. Which brings us to the chart that I prepared on Sunday. Now, don't forget, all these charts are available for you to download as a Yummy subscriber. So if you're visiting us on a free pass or anything today, you're not going to have access to that area. But if you subscribe, you do. And the idea is to give you this information before the week starts. So basically, I mean, you know, look at this move up. Unbelievable, all right? And look how strong it was ending the week. Now, it's been going a little bit flat, but still moving up somewhat. This is the all-time market high that was put in way back in the year 2022. So we have not yet gone above that high. And as long as we don't go above that high, I basically am classifying this entire movement since then as a complex long-term, underscore long-term correction. Now, if by chance this thing continues to rocket up and take out this high, then probably we had more of a short-term correction and not the long-term correction. Now, what implications does that have? Well, if you go back to the left-hand side of the chart and go to 2022, you'll see I have a word called Elliott waves, 5 on the daily, 3 on the weekly. So if we make a new high here, chances are that means wave 3 is continuing, and we had a minor correction inside the wave 3. It's possible, all right, but until we break that high, it is the secondary condition or option I'm going with. Now, the other thing that could happen, which is even more concerning, is that if some complex corrections, not many, but some, a very small percentage of them, break a wave 5 high and then sell off, but they don't break it by too much, but they do break it. And we'll have to keep an eye out and see if that happens this time. That's a very hard thing to forecast, and it's a very hard thing, even when it breaks, to know, and unless a certain amount of time has passed, whether that is the case or not, or it's beginning a new particular move up, and in this case, it would be a final leg up on wave 3 on the weekly chart. So if it is a final leg up and we break the all-time high here, and we continue to go up, then we've probably got another year of bullishness, which is good news for pretty much everybody out there for the markets. If the all-time market high holds and we sell off from here, all right, then we have to go through some bearish support levels before we can conclusively say that the long-term final leg down on the major correction is underway. So let's just take a look at that for example here. So our first bearish major support level at this writing is 32,327.20. And the markets are up there, okay? We're pretty darn high at this particular point. And so it would have to come down quite a bit. What probably is more likely is we'll get some type of pullback to what I call a point of inflection. And a point of inflection is merely profit taking after a big move up. And that usually is a fib retracement level around 36 to 61%. And, you know, it could come down right around this level. And then we have to see what it does. If it bounces off and heads higher than this point here, then we have a situation where we're probably going to take out the all-time market high. However, okay, if it does this, and then this, and then this, then the chances are we're heading down. And we have basically a new leg down on the trend. And we'll see if it has to have any legs. So right now, we're kind of in an area where we have to sit back and wait and see where this market is going. There's many complex corrections that have come very close to taking out the market highs of those corrections and then sell off. So we're still in that category where we could see some sell-off at some point. All right. The question is whether we break the 36,952. And of course, if anybody has any questions on that, let us know. Okay. Currently going into this week, and we'll check these on the live charts, we obviously had bullish momentum represented by our owl optic indicator. And then we had a bullish PTF indicating more highs. So even if we pull back, if this remains green down here, that is a case for more highs. And so we've got to keep an eye on that. So that's the daily chart where every price bar represents a full day. If we go to the 60-minute chart here, we basically are outlining here the dramaticness of this trend up. Huge. We do have bearish divergence building at this particular point, so we'll have to see. But going into the week, we had a bullish PTF as well. So The question is, the million-dollar question is, new all-time market highs or just D wave continuing inside the major correction? So we'll have to wait and see. And of course, after D wave finishes, if that isn't a major correction, then that will be followed, of course, by E wave, which will take it way down. All right, so that's kind of where we're at on the overall synopsis here today. All right, so let me come out of here. Let's go ahead and dump that and take a look currently at the charts for the Dow. So on the far left-hand side, we have our 60-minute chart. This is our daily chart, and this is our weekly chart. So long-term look, intermediate, and short-term, right? That's kind of how we do it, all of the same symbol. So here, if we look at the daily chart, we can see the all-time market high, and we can see basically where prices are right now at about 36,130. All right, so still pretty strong. We no longer have a green PTF on the 60, so we may get a little bit of a pullback, but we do have it here on the daily chart. This is still red, all right? So basically, we're in an area here where, you know, we could still turn around and come down, or, all right, if the enthusiasm continues, we could get a pullback, go up here, and then turn around and come down still. Now, a couple of things that are interesting. What is boding well for a possible bearish scenario is the enthusiasm we're having in the markets. The markets do a great job of doing the opposite of what everybody thinks is going to happen. And so people are getting complacent now in the fact that maybe we're heading for new highs, the market's really good, interest rates look like they're going to stay the same and then get lowered, et cetera, et cetera. So all that information is fueling basically a realm of bullishness in the market. And again, when you see that and you still have not broken the high, you have to take note that this could be a move up that is not going to extend itself above the all-time high. Now, granted, if it does, it does. But back in this area here, what concerned me so much is, like, during this leg down, everybody was saying the market's going to tank, right? So usually when I hear that, I know that if everybody thinks that, that's probably not going to happen, right? All right, now we got the opposite. Now we got the move up. Everybody's complacent. And so this is setting itself up now for the tank. So we'll see, all right? We'll just keep watching the support levels. We don't have that kind of crystal ball to tell you exactly if we're going to break the high or not, but we can certainly follow the market. And at this particular point, I'm staying with a bearish long-term correction as long as the all-time high holds. If we open up here, you can certainly see, all right, just how long this bullishness has gone up, all right, and how toppy this is looking. I mean, if you looked at most any market or stock and saw that, you'd be a little skeptical of, you know, how much higher it can go. So this kind of puts it in perspective. And again, we may get one more quick high, fool everybody, and then have it tank. So it'll be kind of interesting to see what happens with this. We're seeing bearish divergence, all right, as well in the momentum. We've got this red PTF still off the COVID low. So if this thing starts to go down, you can expect, if it indeed sells off at any time pretty soon here, we can expect it to go below the COVID low if it's a long-term bearish correction and not a continuation of this move. So I think that's kind of important to realize. All right, so any questions anybody has, feel free to ask. Al, I'm going to mute you out a little bit here for right now. All right, and then you can come back in later. Let's see what else we got here. All right, so any questions, feel free to type it in. I mean, you can cut your mic on if you want, okay? So it's up to you. All right, so that's kind of where we're at now. Now, let's take a quick look at the S&P. You're not going to find much difference on the S&P, not too much difference anyway, and indicating pretty much the same type of levels, basically, visually at least. And then we have still the green PTF here. So it's not done going up. It's still going to go up a little bit more. Be interesting to see just how high it does. And we have a red PTF on the weekly chart here too. All right, I'm going to switch gears here a little bit. Go to crypto. Hopefully, you guys got into crypto. You know, we've been forecasting this move up ever since it was about $8 to $10. And in the Moore report, if you were able to get in, all right, good job. All right, so this is up to about 35. My recommendation is to continue to hold it. All right, I think this is the beginning of a major move coming, still underway actually, but you've already made about 300% return on first recommendation, so you probably are doing pretty well. But you've got green PTFs on the long term and even the short term. You probably at some point will get a pullback, but it's hard to know exactly when. All right, and if you are happy with your profits and you want to get out with some of it or all of it, use the pyramids on the daily chart and try to let this thing go as far as you can, or even scale out when the 60-minute chart goes to yellow, or we take out that 1B art reversal that's bearish forming now. So we'll see how that goes. But definitely it's due for a correction, but I think it's only going to be a minor correction. I don't think it's going to tumble too much. I think maybe if it corrected now, it would go into the 20s, possibly even upper 20s, and then resume its move back up. Long term, my recommendation is to hold it until the long-term charts show bearishness, and they haven't at this particular point. So hopefully doing well on that. Also too, you've got Coinbase here. Okay, excellent trade as well. Also doing well at this point. Okay, again, no reason to get out of these. And then RIOT is another one that is doing okay as well. RIOT is a little bit lagging behind, and this is the blockchain mining company. But again, you're still getting in pretty early off its bottom. So this is an excellent trade too. And I think it will continue to go up along with the rest of the cryptos. So bullish on cryptos, all right? Expect a little pullback on the cryptos at some point here, probably within the next few weeks, maybe a month or so, I would expect it. And if you want to wait it out and get in on the pullback, you can do that. But you I think a kind of a good place to be for your money at this time. But it's a long-term play right now. The short-term big move, I think, is up, and we may get a little pullback, so you might want to wait on that. All right, let me take a look at some of the real estate ETFs, and I want to start out by looking at CBT, and I want to go to silver and gold. All right, so CBT is a real estate ETF, primarily in the housing market. And, you know, the housing market, the Case-Shiller Housing Index is so far away now from the CPI that is indicating by itself a bubble in the real estate market. And so I would expect if history is any type of teacher of normality, we should probably pull back closer to the CPI. And of course, that will mean decreasing real estate. So I would expect 40% pullback at some point. Maybe that'll happen when the market finally sells off, who knows. But at this particular point, we're seeing a movement up on CBT, probably due to the lower interest rates at this point. I think mortgages have backed off a teeny bit, but this is still red. This is red now. And so this is moving up into a profit-taking normal fib target zone and could go as high as 100, but then we should see some type of turnaround at some point. So I'm a little weary on the real estate market recovering, even if interest rates stay pat. So that's my take on that. All right, let's go to the board here and see what you guys have to look at. All right, so Alexander wants to look at MARA. Alexander, how are you doing? Alexander, you up for another tutorial here in the Arizona area? We're going to probably be having one. I think we're going to have an in-person tutorial here probably, I think, what, Gene, about January, February, maybe February, I guess?
February, yes.
All right, so Gene will be emailing everybody out on that. It's a great time. What we do is get together for a couple days and you come out here, and believe me, Arizona this time of year, the weather is phenomenal. So it's a great place to come. The weather now is as nice as it is in Southern California, if not better this time of year. So come on out, good time to come out, take a little vacation, and then enhance your education. So a good time there. All right, so here is MARA. So let's see what you're doing with this. You're long on this, and you should be long. So you're good shape on this. I'm thinking, Alexander, here you've got more highs coming. All right, it blew past any type of profit taking area. And so this is still green here. So this may be something with some legs on it, okay? If it was gonna stop for profit taking, I think it would have done it in this area here. So you kind of wanna stay with that. On the long-term situation, you're breaking out possibly off a retracement bottom. Let's open this up real quick. All right, so you had a big move down, big move up. So I think we've got some legs on this still, okay? I'm just gonna remove this here, and let's just take an idea of the next major possible move up. Even if it doesn't break its highs, let's just see where we're kind of thinking for, so you've got probably 32 to 52 for some type of level before we really probably have to look at it again, okay? So I think you're okay. All right, MSTR, let's take a look at that one here for you. All right, so this one also coming up off a pullback bottom, very similar. All right, PTFs are all yellow at this point. So what does that mean? Well, it probably means that the ump is coming out of the market. We're also getting some, here's a greed bar along with a 2B. So let's see how the market does with that. All right, so you can certainly see the greed bar there. So that's an indication of getting a little bit hyperbolic in movement and away from an orderly trend line at this point. You've got a little bearish divergence building in this one here, all right? And so far, pretty good here. So I'm not saying it's not going to keep going up, but I think you're gonna get a pullback. So if that greed bar gets taken out here, chances are, or even the 2B reversal at this point, because it's an inside price bar, chances are you're gonna have 2 to 5 price bars at a minimum pullback on that. So if you've been in it for a long time, you got great profit, you might want to take a few chips off the table, so to speak, or not, all right? And then keep your stop at that pyramid. But you're in good shape on that one. Hopefully you got in there in order to get enough profit off that. All right, so let's take a look at LNG here. All right, LNG, it looks like it's probably in the hook of a last big move up. So let's take a look at this. So what do I mean by a hook? The hook means that when you have a quick correction like this, that means that's going to be the last move, and you have bearish divergence, and then you can probably count on a significant correction and a tradable correction, all right, off the hook. So that's a possibility here. All right, so kind of that's where we are there, and you've seen a pullback already. So I guess if you're trying to get every last little bit of juice out of this one here, and you're still long, you're probably close to being stopped out right here, okay, on this stop. And I think probably you need to get out if that gets taken out, okay? All right, especially if you're in those other positions which have so much more move. All right, good. So I knew you had gold on your list. I was going to get to gold. I also want to get to silver too. And here is gold. So gold is doing pretty well. It looks like we're going up a little higher. We're in a short-term target zone already. And on the 60-minute chart, we kind of thought gold would get here. But this is still green, so we should go even back into the target zone again. This is green as well. My target on gold overall is around 200 to 220 in that target range there. So you got some more room left on gold. Let's see silver. Now, silver was interesting because silver, we've been waiting for it to really break out. And we're starting to see it, but then it broke back down. So it broke this pennant, came back down. If you remember, I did not initiate a long position on this pyramid because of the fact we had a red PTF, right? Now it's red again, so you still can't go long, all right? So silver is one of these that everybody is kind of either hyper about it and want to get in it right away. A lot of YouTubers are, you got to buy silver, you got to buy silver. And of course, if you use the technicals like we do, you're not going to miss it. All right. Just be patient a little bit for the technicals to line up to the position you want to take. And so far, they're not right now. Okay. So we've got to see a few changes in this draft down that's taking it back into the pennant. Now, if you are in it already, and depending on if it's a long-term play or not, keep your stop at the pyramid on the weekly chart. So you want to keep this baby right around 20. All right. I think you'll survive the pullback if you keep it at 20. So yes, I think, it's probably setting itself up for a big move up, but let's wait until this move down bounces around if you're not already in it. And if you're in it, don't have your stop too close. Okay. Let me take a look at TLT, the bonds here as well. All right. So TLT is one here that we're kind of, we were hoping that we could get into this, but we still have a red PTF on the weekly chart. So any move up here is going to be temporary according to that indicator. So we're going to kind of weight it off a little bit and hold off. We put a lot of weight on that PTF simply because it's right more often than wrong. It's 75% accuracy rate. And if you thought this was a move up, kind of like what we're in now, okay, the PTF was red, and basically look what happened. It rolled over and made a new low, but when it made a new low, it turned it yellow, and then it turned it red. Now it's yellow, so it's neutral. So that's okay. Neutral is okay. Green over here is okay. This is not okay. So basically, when you have that type of difference between the different time frames, the lower time frame comes first. So we're still going to see some more temporary highs on TLT, but as long as that stays red of the long term, that should give way to some selling in a dramatic view and take it to a new low. So I'm not going into TLT at this time. USO, an excellent one to look at. This is the oil market. This market here, amazing. Okay, so we got a bottom here. All right, right here. Okay, and a bottom here. So this bottom here is where stops should be at this point. If you're going to do it for a long-term play, you have to keep it low. Even this bottom is probably better. Any leg up, you would have gotten stopped out up here. ABC correction still coming down. It's going to be interesting with oil. It's been a tough play on a daily chart because, you'd be out here, okay? If you're holding it for the long term, you can't keep your stops so close. They've got to be really low. And now we've got to survive this pullback here. So we've got red over here. It's still coming down. It may test the low, all right? The pullback low on that. So if this is a wave 3, this is a 4, that's kind of where we're at now, pulling back pretty hard. And this low should hold. If it doesn't, then you're going to take out the bottom of 4, because if this is a 4 bottom, 1, 2, 3, ABC, hopefully it'll take off from here pretty soon. All right, so that's kind of where it's at. Let me open this up, and you can certainly see it moving down, but not going below this yet. So I'm still bullish on USO. All right, but I wouldn't enter it now if you're not into it already. All right, so that's that. All right, let's take a look here at KBE, Bank PTF, right? KBE. Let me type that bad boy in. Okay, so again, my eyes right away go to the red PTF on the long-term chart. We've got green and bullishness on the short-term chart. So until that PTF turns yellow, anything to the upside is a profit taking at this point. And we should return and come back down. All right, so that's kind of the way we look at it. All right, let's, I got a couple minutes for a few more. Let's see, NIO, I don't think I've looked at that one. Alexander, that's for you. You're watching that one. Let's keep an eye on that one. A dang good one to watch too. All right, so this one here, all right, boy, it's skidding along its bottom. All right, green PTF, green. We're starting to see a little pull up here. Let's wait for a little more follow through on this. but this could be a tremendous trade. I'm even going to put this one on my watch list as well, NIO. All right. You still technically, I believe, have an active, almost stopped out bearish pyramid. So I don't want to go long there. Also, too, yeah, this is actually shaping up to be a potentially really good long trade. It just has to have more follow through. So a couple things you could watch for here. You get above here, then no longer you have any short positions. Wait for this to go green. Or if you're more conservative, wait for a pullback after this, which I recommend, and then go in when it takes out the high of the first pull up. All right, and by then that should pretty much confirm that we are now in an uptrend off its bottom. Okay, so that's kind of the way I look at that. So I like that one. NU, just not quite yet. All right, NU, okay, NU, not as excited, not much history, but right away on my eyes on this, I see bearish divergence. I do see this, which is kind of interesting. So if you wanted to try a PTF trade for one more high, because that's what the 60-minute chart is showing with this, you could do that, all right? And put your stop, I would put your stop at the bottom right here, right under this low here. What is that, around $8.08? And get out when it gets to $8.80. So this is a very short-term scalp based on the 60-minute chart. So you'll probably be in this trade maybe a week, 2 weeks, okay? But you might be able to take 60 cents out of it. And that could be worth it if you can load up on the shares or whatever, or do a call. But you got to keep that stop under here, okay? Don't keep it so close. So basically one more high and then get out, because then we're going to be due for a big sell-off, okay? All right, so that's kind of what I'm looking at there. And then if you get stopped out, get out, because maybe that's one of the 25% times it's not working. All right, then now ANET. Let's take a look at that bad boy. All right, so let's see what we got cooking there. All right, I don't know why that is there. Let me just remove a few miscellaneous drawing tools I have there. Okay, so let me move here. Looks like we looked at this one a while back, right? All right, so not doing much for me, okay? Simply because at this particular point, it's run up so much, all right, that, is it better to get in, here, like I normally say, here, or here, okay? Or even here. These are much better, right? Okay, so not here. Too late. All right, too risky. So I wouldn't go into that one. You've got some other ones that you showed me that I thought were pretty good. All right, Marone, how are you? Good to see you here as well. All right, so that's all I got for you today. All right, so hopefully that helped. We are recording this, so the recording will be posted for you. And Gene, I'm going to turn it back over to you. And hopefully I'll see many of you at the client support webinar. And hey, happy holidays to everybody out there. Gene, back to you.
Great session, everybody. And just so you know, we'll be posting the recording of this in the regular Yummy area and also on YouTube. And for those of you who would like to join us on Fridays, we have a live event every single Friday on YouTube called Stock Analysis Friday. So if you're looking for some good picks, that's a great place to come. And if there's anything else you need help with, I'll be here for a couple of minutes and just let me know. Have a great day.
All right, thank you. Yeah, the reason why the voice wasn't any good is because